All right. So we'll continue with head and shoulders. This one is probably one of the most reliable. It's fairly simple to identify. There is a tool to make draw that in TradingView. While we're on this module, I can show you how to do that. But basically, what it's called head and shoulders because it looks like that, right? You have a head and two shoulders, and what that signifies is failure to make new highs. Okay, you want to focus on what's called the neckline. The neckline establishes a level that is very important that you're going to be looking to trade, okay, that you're going to be looking for the breakout from. Okay, so there's a couple ideas for how to trade this. You can be looking for the stop loss at a previous bar. Okay, that's going to make sense when we show you some examples at significant levels or at the last shoulder. Okay, so this is what it looks like, in terms of a diagram. So we see the price fluctuating back and forth here, forming, with a relative high right about here. This is what we call the left shoulder. We also have the head, which we see the market action is able to break higher than the left shoulder. However, we see later that the right shoulder isn't, the relative high here isn't quite able to, exceed that of the head, okay? And that's important because it expresses the fact that we're not able to see higher highs in the market. If we have a trending market, you're going to see higher highs, right? That's part of the definition of a bull market or a bull channel or a bull trend, is that you see higher highs. But here with the head and shoulders, we're simply not able to see that, all right? Another thing I want to call your attention to is this neckline here, which means that the lower bound of the price action is roughly the same. Okay, and if we want to really get into detail about, the left shoulder height versus the right shoulder height and, how that affects things, that we can do that analysis, but this is a really rudimentary introductory class and we don't have to get that technical right now. So here we have a really good example of one where we see the left shoulder here, the head, and the right shoulder. Okay, so again, we see that the relative high here in this chart is less than this one, which forms the head. So this is the left shoulder. And then we have the right shoulder here, followed by our breakdown, okay? So anytime you see a head and shoulders pattern, that is a bearish pattern, okay? So we can expect the market to break lower. Okay, so here, this is this encapsulates what we call an inverse head and shoulder, okay? So this is bullish behavior. So a head and shoulders pattern doesn't necessarily need to be 100% of the time, evincing bearish behavior. If we flip it upside down, remember, just about always in our market, in our analysis, if we have something that portends bearish behavior, we flip it upside down, we get the qualifications for bull behavior. And this is what this is one of those examples. We call this an inverse head and shoulders, which is basically the same thing, just flip it upside down. Okay, so this is the TradingView tool. This is why I like it so much, is that when you set up the tool, it really spells out the regions that comprise the head and shoulders pattern for you. Okay, so we have the left shoulder here, obviously on the left, the head down here. Notice that the low here this time is lower with the head. However, with the right shoulder, we were not able to press further and break this level here. We actually came back and broke out to the upside. Okay, so does that make sense, this pattern?
Yes.
Okay, perfect.
Yes.
Now, with the head and shoulders, just one last thing is that the neckline does not need to be horizontal. It can have a slope. So what I mean by that is if you see this kind of wonky angle here with your head and shoulders, that's perfectly fine. They tend to be a little bit more, easy to recognize if we are, on a horizontal level, but the same truth is still in this pattern, right? So we have this left shoulder, the head broke the highs of this, but with the right shoulder, we just simply weren't able to cut it and come above the head. So that basically is telling you that the asset is losing steam, right? It's starting to kind of drop off. And sure enough, we have this breakdown here. All right. So there's one thing that I want to make clear is that you don't want to try to jump the gun with head and shoulders patterns. Okay, so I have, my left shoulder here, my head here. It's tempting to want to, short somewhere around here if you start to anticipate this pattern to form. But you have to be careful because if it's not fully formed, we have the potential to make new highs, okay? In which case, this is no longer a head and shoulders, right? So in other words, if we're here, at the beginning of the head and shoulders, or sorry, at the end of the head, in the head and shoulders, what we expect is the dashed purple line, right? We expect the shoulder to form, but if it does not, we could potentially see the red behavior, right? So we could eventually, break new highs, in which case, again, that is no longer a head and shoulders pattern. You're no longer seeing that, loss of momentum and failure to make new highs, and the pattern is completely broken. So if you jump the gun and you anticipated seeing this head and shoulders, and maybe you shorted somewhere around here, you could be in trouble. Okay, so what we want to do is we want to wait for this shoulder to form and wait for the breakout to happen around the neckline. Again, the neckline is this horizontal line here, this horizontal trend line, which is the boundary, the lower bound of the market action here. Okay, so when you see a breakout, it's going to be around the neckline, okay, not up here somewhere. Okay, so be careful because this is most probable with conviction. Watch out for false breakouts. False breakouts will often be identified by candlestick reversals. Okay, you guys remember candlestick reversals patterns from the last class. Okay, candlestick reversals patterns are very, very important and can identify when something you thought was a breakout is actually not. Okay, and remember, I impressed upon you that every single module we cover will be referencing stuff from the last module. Okay, so just because we've only covered it once doesn't mean it goes away. These candlestick patterns are very, very useful in determining if what I'm actually seeing is a breakout or it's just nothing. Okay, so what I mean by conviction, I mean the same thing that I was discussing about with the channel patterns. Okay, remember with the channel patterns, what I called a breakout was that big fat candle, either red or green, depending on whether it's a bearish or bullish, and also volume. Okay, so when I say conviction, I mean there's a lot of volume going through. The market has definitively made a decision about where it's going to go. If it doesn't, if it's just kind of wishy-washy, and you don't see a lot of that, you don't see a lot of volume, you don't see a lot of big candles, then it's not worth trading. So here's a great example because, if I'm looking at this, I see almost a perfect head and shoulders pattern. Again, left shoulder is the head is lower than the left shoulder, right shoulder. This implies that, okay, we couldn't make new lows. But notice here, I'm not seeing any action whatsoever. So if this was to break to the upside, okay, as this inverse head and shoulders pattern may foretell, it's, I would expect to see a big green candle with some buying. what do I see? Well, I see it breaking lower with a big red volume candle. Okay, whenever you see, volume bar. Whenever I see these on the bottom, you see the volume. That's the amount of buys or sells that are actually going through. Okay, and it's colored red or green depending on whether they're in the buying or selling direction. So I see a big red bar here when I should expect to see a big green bar. So this is telling you that whatever breakout I'm seeing, probably not going to go in the direction that I want. And as you see, it's very lackluster and just kind of meanders. Final option, wait for conviction. Large bar in the direction of the breakout, and the stop loss is at the base of that bar. Okay, so this is getting into how you would actually trade this. Okay, this I see that this fairly green bar, a fairly big green bar. It's not as big as I would like it to be, but you know, it's good for this example. And you see that you know, we enter on this large bar. Where would I put my stop loss? Okay, again, these patterns we're teaching you this because there's utility in trading. Okay, so if I identify this candle here as my entry point, if I want to be very, very conservative about a stop loss, I don't want to wait for it to bounce back and head over to the right shoulder. I want to get out as soon as I possibly can, because if I do truly see a breakout, if this is in fact a breakout, the price action should be going up, not down. Okay, so if I enter somewhere on this big bar of conviction, I should be pretty confident that the price is going to eventually go above that, right? Not below. So if I want, I can put a stop loss at the base of this bar. All right, does that make sense? How you trade this? If you look to see this big bar conviction, I expect it to continue to go in that direction. If it does not, I'm wrong. That's okay. Get out and with minimal loss.
Yeah.
Okay, so how I do my head and shoulders pattern with TradingView. Okay, remember we had this little thing here called patterns. It's you know, there's a little thumbs up thing. This guy is like 2 doors up from the little thumb thing. And then I have an arrow. Okay, it's really easy to click on where the fuck this is, but what you want to do is click on this little arrow. I know it's kind of, you know, it's a little bit of a detail, but if I do that, I see all the cool shit that TradingView allows me to do. Okay, so I'm going to select head and shoulders, and basically this is really super easy. All I do is I just draw it. Okay, so I click at the base. I go to the apex of my left shoulder. I click. I come back down. Remember that the head and shoulders pattern really cares about the neckline, right? So I want to try to align it with my neckline. Now I have to draw the head. I'm going to come back up, click again, come back down. Now you see it start to draw it for me, okay? So if I align it here, now I have these two, you know, the left shoulder and the head, and my final step is to draw the right shoulder, okay? So every single vertex here, I'm going to click. All right, so let's just do that again. If I want to trash this, I simply hit the little trash can. Let's go back now. Notice that once I've selected it in TradingView, it keeps this pattern handy for me. Okay, so what I'm going to do is click on this again. One click, second click on the left shoulder, pull it down, third click to start the head, fourth click to complete the head, and then 2 more, and I'm done.